Are you wondering if York Region's real estate market is shifting? Or more importantly, are you wondering if York Region's real estate market is shifting? Or more importantly, if this could be your window to buy or sell smarter? This month, we're breaking it all down. Precision numbers, no hype, and strategies that actually work. Whether you are a move-up buyer, or a first-time buyer, or thinking about selling this year, there is real opportunity if you know what to watch for. Hi, I'm Pam Bechard, a full-time realtor proudly serving York Region and South Simcoe since 2011. My approach is simple: local insight, trusted advice, and a client-first strategy that helps you navigate this market with confidence. Whether you are a first-time home buyer, move up, or preparing to sell, I will help you make smart, informed decisions every step of the way. Are you curious what your home might be worth in today's real estate market? Scan the QR code, no pressure, just helpful insight to get you started. Let's start this report with a quick comparison between the Greater Toronto Area and the York Region. As of June 2025, the average home price in the York Region is approximately $1,242,000. That's roughly $140,000 higher than the GTA average sale price, which is currently around $1.1 million. But this price gap isn't just about square footage. Buyers in the York Region are also paying for larger homes, top-rated schools, more green space, and a lifestyle that supports family and long-term growth. For buyers moving between regions or sellers adjusting expectations, this gap is essential context. As I just mentioned in the last slide, the average sale price in the York Region is around $1.242 million, but the median is lower at $1.1 million, and that difference really matters. You can see it clearly in this chart. Over the past 6 months, equity-backed buyers have been reaching into higher price points, not just for more space, but because they're seeing real value in the upper range. So the question is why? Because price growth at the top end of the market has cooled. There's more inventory, less competition, and buyers are getting more for the money. Larger homes, upgraded finishes, and better locations with more room to negotiate than we've seen in recent years. At the same time, the majority of transactions are still happening closer to the median price point. That's a critical insight for both sellers and move-up buyers. If you're selling, pricing above where buyers are active without a clear value advantage could lead to longer days on the market and fewer showings for you. But if you're a move-up buyer, this is your moment. With equity to leverage, that mid to upper range is where we're seeing the best combination of selection, value, and negotiation power. Let's take a closer look at the market balance and where buyer leverage is starting to show up. In York Region, active listings are up 38.8% year over year, rising from 2,689 in June of 2024 versus 3,733 in June of 2025. That's a larger increase than the broader GTA, which saw a 30.8% rise over the same period. This surge in inventory is shifting negotiation power back in favor of the buyers. York Region's sales to new listing ratio now sits at 36%, which is below the balanced market threshold. That signals more supply, slower competition, and better leverage for buyers, especially in higher price points for homes that have been on the market longer. And with active listings at 38%, buyers in the York Region have a slight edge over those in other parts of the GTA. But whether you're buying or selling, this is a key moment to understand how rising supply is shaping pricing expectations and why your strategy needs to adjust with the market. Looking at market advantage by segments, And examining what the numbers reveal is what we're going to do in this slide. The sales to new listing ratio, or often referred to as SNLR, shows how quickly the market is absorbing the listings. A higher ratio means stronger demand. A lower ratio means more supply and more negotiation power for buyers. In the first-time homebuyer segment, demand remains strong. Homes are moving quickly and sellers hold the advantage still. For move-up buyers, where the market is more balanced, there's more inventory and days on market are moderate. The buyers with equity have room to negotiate, and they're the ones that are winning. In the luxury segment, buyers currently have the most leverage. Longer time on the market and slower sales to new listing ratios means sellers need to become more flexible. For investors, it depends really on the product. However, in some areas, especially with the rising rental supply, real opportunities are starting to emerge. So my takeaway for you is knowing where your segment sits is what gives you more innovative and more strategic approaches within this market, whether you're buying, selling, or just simply planning. York Region has officially shifted to a buyer's market. This is significant, guys. For the first time in nearly a decade, we have moved beyond a balanced condition or a seller's marketplace. As of July 2025, the region has over 6.7 months of inventory, and in communities like Aurora and East Gwillimbury, that number is closer to 8 months. That means more choice for buyers, more room to negotiate, and longer time on the market for sellers. But here's what's important that didn't happen overnight. You can see the progression through 2025. We have been slowly climbing from tight inventory to balanced conditions, and in June, we now started to move into a buyer's marketplace. The agents and clients who understand this shift and respond to it strategically are the ones who are going to come out ahead. Moving to days on market trends. Back in January, the average day on the market was just over 30 days. That number dropped throughout the spring, hitting a low of 22 days in April as buyers actively increased. However, we are now seeing days on market climb again, with June averaging around 25 days. This shift reflects growing inventory, buyer caution, and the fact that homes must be priced and appropriately presented to sell. It's another sign that we're firmly in a more strategic, buyer-sensitive market, not a seasonal cycle. This is one of the most telling slides of the entire report. It shows precisely where transaction volume is strongest across the York region. And right now, the highest number of sales are happening between 1.3 and 1.5 million. That followed closely by 1.1 to 1.3 million range. And this aligns with what we are seeing on the ground as agents in Newmarket, Aurora, and East Gwillimbury. These markets are being driven by equity-backed move-up buyers and downsizers who are targeting larger homes in well-established communities. It also is a key reminder, even though the average sale price is just over 1.2 million, the bulk of activity is clustered around that level of $1.4 million range, not below it. For buyers shopping above that 1.5 million, there's less competition. For sellers in this higher bracket, a targeted marketing and pricing strategy becomes essential. I like to look at community hotspots where buyers are most active in the York region. And right now it's in Newmarket, Aurora, East Gwillimbury. And I've added Bradford to this, even though Bradford is actually technically in South Simcoe. It is often thought within the buyer's marketplace to be parallel. In Newmarket, properties are moving quickly, especially in the Glenway neighborhood, averaging just 16 days on the market. Aurora homes, particularly in the Bayview North and South, continue to draw strong offers, often firming up within 22 days or less. In East Gwillimbury, areas like Holland Landing and Sharon are drawing steady interest from move-up buyers, with detached homes averaging 23 days on the market. Bradford is standing out for detached homes around the $1.1 million range, offering both space and value, with homes selling in as little as 18 days. These aren't just popular towns. zones, there where buyers are actively making offers. If you're considering making a move, this is where the energy is currently concentrated. I'm currently working with a few clients focused on these areas. Some are planning to move up while others are preparing to list. And we are seeing the difference that timing and the local knowledge of their marketplace is really making a difference on our strategic plans. Now, if we want to start to look at strategy for sellers, you need to consider that inventory is up nearly 39% year over year, and buyers have more options, which means they're taking their sweet time asking more questions and negotiating much harder. However, even in this environment, homes continue to sell quickly in high demand areas such as Glenway and Bradford. The difference is a smart listing strategy. Here are the top moves I'm advising right now to my clients. Price with precision. We use local sales data with precision. We use local sales data to price homes where buyers are transacting, not where they used to be 2 years ago. Lead with a presentation. Homes that are staged, updated, and photographed well are outperforming listings that feel tired, dated, and overpriced. Maximize your exposure. No longer is it just simply acceptable to list and put it on MLS. You need to market strategically to find out-of-area buyers moving into the York region as well. As a seller, you need to stay flexible, not desperate. When your pricing and presentation are dialed in, you can still hold firm and negotiate on your terms. The bottom line is strategy wins. Sellers who lead with data, preparation, and flexibility are still achieving strong results even in this shifted market. Now, when we consider buyer strategy, if you are a first-time home buyer or planning to move up, here are 4 strategies I'm recommending right now. Shop below your budget. Aim 5 to 10% below that top number to create negotiation room, but we're also seeing many homes selling. We are also seeing homes selling for under asking, especially in the slower moving segments. So this is a win-win. Be data driven. Use days on market and inventory trends to find leverage. For example, homes sitting longer on the market in East Gwillimbury or Aurora often present better offer opportunities. Be selective, but be ready. With more listings available, you can take your time, but when that right home shows up, having a financial plan done gives you the edge. And I think it's really important to think beyond that price tag. Focus on the long-term value of the property you're looking at. In areas like Newmarket and Holland Landing, you're investing in lifestyle and future equity, not just square footage. The bottom line is buyers who are succeeding today are not rushing. They're informed, prepared, and playing a long game. So here's your reality check. This is not a distressed market, but it's no longer a balanced market. York Region is now firmly in a buyer's market with 6.7 months of inventory and a sales to new listing ratio of 36%. This doesn't mean prices are collapsing. Like we've seen 4 to 6% change. In some communities like Vaughan, it's at 10%. But this doesn't mean buyers have more leverage, but this means buyers have more leverage, more options, and more time to make their decisions. Sellers are responding. We are seeing relist to reset days on markets and price adjustments on homes that miss the mark. This is a critical moment for both sides. Sellers need to lead with strategy, not guesswork. Buyers need to act deliberately. If you ignore the noise, the real opportunities lie beneath the surface in local data, micro market trends, and knowing how to time your move with confidence. So that brings us back to the question, who's actually winning? For buyers, this means making data-driven offers, targeting homes on longer days on market, acting quickly and with confidence when the right property appears. For sellers, it is about positioning, pricing it right from day one, presenting with intention from staging to marketing, and understanding the psychology of today's buyer who is cautious, selective, but informed. This is not a market for guesswork or delay. It's a market for people who want to win with clarity, planning, and the right advisor beside them. We start to look at who's actually winning, and I think first-time home buyers are the ones who are really taking away with the prize and winning in this market. For the first time, they're not seeing bidding wars. They're able to go in and present an offer with conditions. They have time. They can act strategically, and they're winning in areas like Georgina and parts of Newmarket and Bradford for sure. Move-up buyers are also winning because they're able to seize the moment and and prices are stabilized in the mid-range price bands, giving them room to move up without overpaying, especially in towns like Newmarket and East Gwillimbury that have a lot of new home built stock. Downsizers and investors are tracking longer days on the market and price reductions in that premium market, and they're able to actually find more bungalows or homes that are more conducive to the next stage in life for them. But what's key for them is cash and patience. It goes so much further now than it has in the past 10 years. This window may not be open forever, but right now for the right buyer, this is the rare chance to move forward with strategy and no pressure. With my clients, I really love to identify what the sweet spot is. And in today's market in York Region, that sweet spot is in the 1.3 to 1.7 range, because this is where we're seeing the most transaction activity, the strongest equity-backed demand, and the emerging buyer leverage. In this band, move-up buyers are actively upgrading, and the downsizers are looking to right size into better locations. There's enough inventory to negotiate, but still enough demand to support firm sales when pricing and presentation are in line. If you're buying or selling in this market, this is the moment where smart strategy can unlock real results before the fall rush resets or we see a continual increase of inventory. For the month of June, let's zoom into what parts of the York region that are providing the top performance neighborhoods. In Newmarket, Glenway and Stonehaven are clear winners. In East Gwillimbury, Sharon, with its detached homes priced between 1.3 and 1.6 million, continue to sell quickly. And well-staged homes are still drawing strong offers. In the rare case, still seeing multiple offers. In Aurora, the market remains steady, but homes priced over the 2 million price range are taking longer to sell unless they're priced with exact precision. The ultra premium segment of the York region, which are, in homes found in King City and Richmond Hill, are seeing softening with longer days on the market and more price resistance in the high-end listings. These micro markets are where savvy buyers are stepping in and where sellers can still succeed if they align with local conditions and the buyer psychology. If you're thinking about buying or selling in the York region this year, the difference between watching the market and winning in it comes down to one thing: strategy. Book a 30-minute consult with me and I'll walk you through your options based on your current home, your neighborhood, your street, your goals, and what the data is telling us right now. No pressure, just clarity, local knowledge, and a game plan tailored for you. Whether you're upsizing, downsizing, or entering the market for the first time, this is where strategy meets action. If you found this video helpful, I would love to hear your thoughts. Feel free to leave a comment below. Don't forget to like, share, so you'll never miss future updates. You'll also find free guides and resources linked in the description to help you plan your next move. Thank you again for watching, and I'll see you at the next video. Bye for now.